Thank you, listeners, for joining us today on Ask the Expert. My name is Jessica Lau of Sprott Money News, and we are very excited to have the pleasure of speaking with Chris Powell this morning. Chris Powell is one of the founding members and secretary/treasurer of the Gold Antitrust Action Committee, GATA. Chris has also been a managing editor of the Journal Inquirer, a daily newspaper in Manchester, Connecticut, since 1974. He writes a column about Connecticut issues that is published in a dozen other newspapers in the States and Rhode Island. With this, I'm pleased to welcome Chris Powell this morning. Hi, Chris.
Hi, thanks for having me here.
Thank you for joining us today. So let's jump right into it. The first question is, with the current situation unfolding in Cyprus, how do you see this affecting precious metals? What about the long-term survival of the euro and the union?
Well, in the first place, I prefer calling the precious metals the monetary metals because I think that really illustrates the issue that we're in here. Gold and silver are forms of money, and that's why they are affected by all these financial issues, such as what's happening in Cyprus. I think what has happened in Cyprus has been a very wonderful reminder to the world of the old biblical story with Jesus when he was asked by people who were trying to trick him whether they should pay taxes, and he took the Roman coin and held it up and asked, whose image is on this coin, and they said it was Caesar's, and he said, render unto Caesar the things that are Caesar's, and unto God the things that are God's. And the Cyprus business is a reminder that if you are going to use or handle or play with government-issued money, in the end, government is going to tell you what it's worth, and maybe change the values on you overnight, change the rules of possession overnight. And we've been warned, and we should act accordingly. That we may think that money is ours, but if any particular government is issuing it or controlling it, they may take it away from us, or they may tax it, or change its value on us overnight. Money is not reliable when it is issued by a government.
Yes, the situation is really unfortunate, but I think you're right. Okay, next question. Do you see the same situation happening in U.S. or even North America that is occurring in Cyprus and other banks as well?
I don't think so. There's a main difference here. Cyprus is dependent on the European Central Bank and the European Union for its money, the euro. By contrast, the United States and Canada have their own currency that their own governments can issue without limit. Now, we may very well have devaluation of the currency here in the United States or even in Canada, but we'll never have any money shortage because governments here, unlike the government in little Cyprus, can issue their own money without limit.
Okay. So keeping on the topic of currency, there is a surge in popularity with Bitcoin as an alternative currency or investment. What is your opinion on Bitcoin? Do you believe it is a legitimate or a mere passing phase?
I'm intrigued by it, Jessica, but I think it's got the problem of who's standing behind it. Is it really an uncrackable computer program? And if it gets counterfeited, for example, who's responsible for fixing it? I mean, can it be counterfeited? I suspect that some national security agency could probably counterfeit it, or at least start manipulating it by trading in Bitcoin futures as they manipulate the other commodity markets by building futures markets on top of them. But I'm basically libertarian about money. I think being libertarian is solution to the money problem. I think I'm in favor of just letting various forms of money compete and letting the market choose among them. Government currency really can't claim to be so much superior to Bitcoin. I think the figure is that the U.S. dollar has lost something like 98% of its value in the 100 years since the Federal Reserve was created. So who connected with the dollar has the right to criticize Bitcoin or anybody else? Let's let them compete and see how they do.
Thank you. And next question is actually from Twitter. What do you expect to happen in the days or weeks right before the manipulation scheme blow up?
Well, nothing necessarily, at least nothing in public. I have always suspected that the current era of price suppression will end in an overnight revaluation of the monetary metals and devaluation of the major currencies. That's how things have changed before. They happen overnight through international agreements. I think we can look to history for a little indication, and that is look to the London Gold Pool, which is a public arrangement of gold price control that was undertaken by the United States and Great Britain and I think 7 or so allies in Western Europe throughout the 1960s. It was a public scheme of distorting of the gold reserves of the participating countries, the countries participating in the London Gold Pool. And as inflation greatly increased in the 1960s, largely because of United States participation in the Vietnam War and the increase in social programs, the gold offtake in the London Gold Pool greatly increased as the market realized the gold was undervalued and the price was being suppressed too much. The London Gold Pool drained the U.S. gold reserve in the last, I think, couple of years before its collapse in 1968. The gold reserve from something like 25,000 tons to the current 8,100 tons. It got so bad, the gold offtake in the last month of the London Gold Pool, that the United States was flying emergency Air Force cargo shipments of gold over to the Bank of England in London because the Bank of England was advancing the British gold reserve to feed the market and really running the British reserve down to almost nothing, advancing credit to the United States. There were, I guess, hundreds of tons being taken off every week through the London Gold Pool, and there were emergency government meetings here in the United States and over in London as the offtake became so great. And I think finally the United States realized that at this rate it had only a few more weeks of gold reserves left, and the United States government asked the British government to close the London Gold Pool and close the London gold market, and that was done in March 1968 simply because the metal to suppress the price of the market ran out. Now the London Gold Pool ended overnight. The price was $35 one day, and the next day there was no market at all. And then a private market built up after that at a substantially higher price. I suspect something like that will happen again, and it very well may involve an official revaluing of gold upward by central banks around the world, a much higher price that the central banks may attempt to defend by another few decades of market intervention.
Interesting. We shall see what's going to happen. Next question is also from Twitter. How credible do you find CFTC's investigation? Will something credible come out of it, or do you suspect the real news will come out ex post facto?
The U.S. Commodity Futures Trading Commission has been supposedly investigating the silver market for 4.5 years. There's been no report, and I suspect it's because the CFTC has finally recognized that the silver price suppression scheme, like the gold price suppression scheme, is essentially a U.S. government operation with J.P. Morgan Chase as its broker. If that's the case, then the CFTC certainly can't say anything about it because it would jeopardize a national policy. For a hint about this, we can look to history. Back in 1965, when President Johnson signed the Coinage Act, removing silver from all U.S. coinage, he issued a signing statement, which is posted on the internet site of the University of California at Santa Barbara, and it's been picked up at GATA's own internet site. The president warned investors to stay away from silver, not to invest in the monetary metal in anticipation that the price would go up, because the U.S. government was removing it from coinage, really because the price already had gone up. And the president warned investors that the U.S. government would disgorge silver from its strategic silver stockpile to prevent the price of silver from going up. Now, supposedly the U.S. government has exhausted its strategic silver stockpile. I don't know exactly what the U.S. government is doing in the silver market, though I suspect that the U.S. government's very much involved in the silver market, selling futures and options and other derivatives, perhaps through the Bank for International Settlements in Basel, Switzerland. But we do know from President Johnson's statement in 1965 that the United States government has a very powerful interest in the price of silver because silver is potentially a competitive currency. And in 1965, the U.S. government, as the price of silver was getting away from it, warned the markets that the U.S. government would intervene in the silver market to keep the price down, and that people should stay away from investing in silver. I don't think that interest in controlling the price of a monetary metal has changed in the least in all the decades since then.
Speaking of manipulation, what do you think can stop J.P. Morgan and the rest of the other players from continuing to manipulate the market indefinitely?
Well, I mean, one thing that could stop it, I think, would be simply some serious financial journalism. If the markets were reported on seriously, if central banks were questioned seriously with specifics about their interventions in the gold and possibly the silver markets, those interventions would be tremendously impaired. I think the biggest advantage that these interventions and manipulations have is that the financial news media simply will not ask any questions about them. Any exposure about them would destroy their usefulness. People would realize that these are not markets at all, that they're simply rigged. But what can an individual who's not part of the financial news media do? Well, buyers simply have to take real metal, have to buy real metal, not paper claims on metal. And as Jim Sinclair and others have said, you've got to take your metal outside the banking system. That's what buyers can do in their small way. Is if you're going to buy monetary metal, you've got to buy metal, and you've got to get it out of the hands of the people who claim to be selling it. And it's a small thing that individuals can do. The financial news media could do the big thing of questioning central banks about their market interventions and reporting the refusal of central banks to provide certain information. And that's really something that GATA is working on.
Next question. Ted Butler has been trying to prove the silver market is being manipulated for 25 years, but has failed to convince the powers that be. Does not the fall in the paper price against huge physical demand show that J.P. Morgan et al. can hold the price down as long as they wish? And if so, what point is there in private investors being in the market?
Well, again, this is an issue for buyers themselves to decide. I don't know that you can really blame the U.S. government or Morgan Chase for pursuing their own interests here. It's a great business. The gold and silver business is a business where you can purport to sell something but never have to deliver it. I mean, I'd love to have a product like that. If I was selling hats or something like that, I could tell people, all right, look, you can buy that hat on the shelf over there. Just give me your money, but there's just one little detail here. You can't take it with you. You buy the hat, and I will keep it. And that's really what gold and silver investors do with bullion banks. They pay for what they think they're buying, but they never take delivery, and so the metal is resold to any number of people. Perhaps according to the statistics of the London bullion market, the same ounce of gold may be sold 100 times to 100 different people, and people just don't have the sense to take delivery of their metal. The other day, the Reserve Bank of India actually issued regulations to authorize gold exchange-traded funds in India not to hold gold, but rather to lend it into the market. Now, why anyone in India or anywhere else would who wanted to invest in gold or silver, the monetary metals, to hedge themselves against currency devaluation would buy a piece of paper, a claim in an exchange-traded fund that admittedly did not have the gold that it was supposed to have is absolutely beyond me. But this is really what goes on in the gold and silver investment world. Most gold and silver investors just flush their money down the toilet by buying these illusory paper claims to metal of which they never take delivery. This issue, it's really up to buyers. If you want to buy metal and take it out of the banking system, prevent it from being sold to many people at the same time, that may be a good idea. But if you just want to buy a paper claim to metal that doesn't exist and may not be available to you when you really need it, you might as well flush your money down the toilet.
It is said that the physical market will eventually overwhelm the paper market. Why, if the price is set in the paper for the physical?
Well, it's the price is set in the paper market every day until it's not. We have the example of the London gold pool. One day the metal simply ran out, and there was a new price. I don't know when the metal will run out. I'm not permitted to know. No one is permitted to know exactly how much gold central banks have. The official figures are almost certainly disinformation. I can give you some examples on that. Specifically, Western banks will not allow anyone to know how much gold they have swapped with each other or how much gold they've leased into the market because, according to a International Monetary Fund report from March 1999, this information on gold swaps and leases is considered too market sensitive, and its disclosure would interfere with central bank interventions in the currency market, which are done surreptitiously. It's really a political decision. It's an inventory decision for the central banks. They may look very strong on any particular day, and then overnight the situation changes because the metal ran out. They will not be calling you or me, a few days before to say that policy is going to change in a few days when the metal runs out. It will happen. It'll happen overnight, and that's what has happened before. And gold investors get very despairing right now that they've been cheated for so long. On the other hand, you have to take a fairly longer view in this business. When GATA got started back in January 1999, the gold price was around $260 an ounce, and today it's just about $1,600 an ounce, and something I guess more than 13 years. I mean, that's a huge gain, and somehow we're always depressed, and we always think we're getting beaten up. We're certainly getting cheated by this surreptitious intervention in the currency markets by central banks. But in fact, we're winning. We're just winning more slowly than we'd like.
Okay, next question is about copper. Copper prices have dropped rather dramatically in the past 6 weeks and by about 20% since 2011. And so one might predict a drop in copper production in reaction. What effect on gold production could be anticipated because of this? Should copper price stay in the range of $3.25 to $3.50?
Well, copper is very often associated with gold and mining. A lot of copper mines produce gold as a byproduct. So with copper production decreasing, gold production is likely to decrease as well. On the other hand, I don't think mine production has a major influence on the gold price in the short or even medium term, because there is so much gold above ground in inventory that is available to the market on any particular day if the price is right. That mine production really doesn't matter much. I think typically there's only maybe a 2% increase in the total gold supply in any particular year coming from mine production. Most of the gold that has been mined throughout history is believed to be above ground, hoarded and available to the market. And mine production is such a small proportion of that every year that its influence on price is really marginal. The determinants of the gold price are really much more widely disseminated than that. The determinants of the gold price are first primarily how much gold central banks are willing to disgorge, how much gold futures contracts and options they're willing to sell, how much money they're willing to put at risk in the futures markets to control the price. Mine production, I don't think it's anything for anybody to worry about if you're following the monetary metals.
Okay. Now, for the first-time investor, what is the best way to own gold?
Well, I'm not an investment advisor. I'm willing to tell people, what I do myself from the observations I've made about the markets over the years. My general advice to people is to get as much real gold and silver as they can, and then find a safe planet to keep it on. And when they find such a planet, would they please call me?
Okay.
I mean, they just, I don't want to be too flip, but this is a very problematical sector. Money is very sensitive to government. I mentioned the story about Jesus from the Bible with the Roman coin and rendering unto Caesar. Governments are incredibly sensitive about gold because they know it is natural money. They have tried throughout history to control the price and defeat a market in gold because it impairs their own power if the gold market is free. In the United States, of course, and back in 33 and 34, we had an attempt by the government at gold confiscation. As governments become more desperate and tyrannical, they could try to put controls on gold, just as they're putting controls on their own money. I don't know what government's going to do when they're desperate, as their power is jeopardized, as they continue to overreach, as the welfare state begins to crumble under its own weight. Governments may get desperate. They got desperate in Cyprus the other day. They tried to confiscate or tax bank deposits. They got away with it. It's possible that they may try to confiscate gold. I don't expect it's terribly likely, but I did have some email with the U.S. Treasury Department some years ago, as I tried to determine what the U.S. government's position on confiscation was. They didn't want to answer me, but finally, through the intervention of my congressman, they were compelled to answer me, and I had a fairly candid reply from I think the Assistant Secretary of the Treasury for Foreign Assets Control. And this correspondence is published in the confiscation section of GATA's internet site. The Assistant Secretary wrote to me that the Treasury Department's position on confiscation was as follows, that under the Trading with the Enemy Act of 1917 and the Emergency Economic Powers Act of, I think, something like 1979, the Treasury Department claims the power upon the proclamation of an emergency by the President of the United States to seize or freeze any gold or silver-related asset held by any American. But the Assistant Secretary continued that I shouldn't get too paranoid about it, because under the same two statutes, upon a proclamation of emergency by the President, the Treasury Department claims the power to seize or freeze anything. So this is simply a matter of just how tyrannical the government wants to get. The conclusion I drew from this correspondence was that not only is it advisable to hold real metal and to hold it outside the banking system, or to hold claims on real metal with people that you trust, funds that you are sure have real metal and who keep it outside the banking system. Not only is it imperative to hold real metal directly or through the most trusted intermediaries, it's probably advisable to diversify the geography of your holdings, so you're not entirely vulnerable to any one government's excesses. So diversification in geography, I think, is a good idea. It's entirely possible that the nominally free and democratic countries will be more tyrannical about money than the nominally totalitarian countries like Russia and China.
Interesting. Thank you for sharing that information with us. I'm sure a lot of our readers are interested in knowing that. And actually, to help with this problem, you said to own physical real metal and to be able to store it in a geographical location that is safe, which is why Sprott Money is here. We actually offer gold and silver bullion, as well as recently we launched a Canadian storage program for all of our customers, because there's such a great demand for it. Everyone's asking to store the precious metals in Canada instead of the States. So yeah,
I think a lot of Americans are interested in holding some of their metal outside the country, and Canada is the free country next door, so that's always of interest, I think, to Americans who want to invest in the monetary metals, but want to get it a little beyond the reach of any excesses of the U.S. government.
Yes. Okay, so then what is your price target for gold and silver for 2013?
Oh, I really hate to make price predictions, Jess. The gold price is going to be a political issue. I don't know how governments are going to react to events. I don't know whether investors are going to wise up. If every gold investor in the world decided tomorrow that he was going to buy only real metal and take delivery and get it out of the banking system, then I think the gold price suppression scheme would be over. And GATA is working on trying to awaken investors to that, but I don't know if we'll ever have enough success. But if investors ever awoke to the counterfeiting of gold, the issuance of infinite amounts of imaginary gold, or if governments ran out of the metal that they need to suppress the price with, then the price could explode overnight. This is a political issue. It's not mathematics. It's not physics. And I'm not a political scientist any more than I'm an investment advisor. I'm really just an ordinary newspaper editor who figures that you're probably best off when you're putting specific questions to original sources, which is what the financial press on this planet fails to do. And I know from the answers I have been refused, and I know from the documentation my organization has collected, that there is an enormous racket and deception going on in the monetary metals markets, and that really gold is the secret knowledge of the financial universe, and GATA is working very hard to share that. And when that secret is out, and when investors realize that perhaps 75 or 80% of the gold they think they own doesn't even exist, then the price may be substantially higher than it is today.
That's a fair take on it. Okay, then very last question now. Can you tell readers about any upcoming speaking engagements or conferences you're going to?
Oh, sure. I just got back from the Mines and Money conference in Hong Kong. The next conference in which GATA will participate will be the Cambridge House World Resource Conference in Vancouver at the end of May. I don't think we've posted anything about that yet. It's a little early, but anybody could go to the CambridgeHouse.com internet site and find the information about the Vancouver conference there. It's always a great conference, and Vancouver, of course, is really the center of the mining and mining exploration industry. And Vancouver is just about my favorite city in the world. Beautiful place, really year-round. I'd encourage anybody to come to Vancouver. If I got tired of listening to the speakers, they could just go outside and walk around and look at the beautiful city and the mountains and the harbor. And I don't think the Vancouver conference could ever be a disappointment to anybody who just, could always go out and just be in Vancouver.
Absolutely. I was there last year and it was great. Okay, so then, thank you very much for being here with us today again, Chris. Your information has been really helpful and insightful. I'm sure a lot of our readers will be very happy with this interview.
Well, I'm always glad to run my mouth about this issue, and thanks for your interest, and you know where to find me if you need anything.
Okay, thank you very much.
Okay, take care.
You too, have a great weekend.
Bye-bye.
Bye.